All right. Well, it's noon, so I'm going to start kicking things off. And we'll probably have some people coming in a little bit late, but for everyone who's here now, thank you for joining us. You're probably pretty well aware of the town hall series that we've been doing all throughout 2020, and we're happy to kick it off again in 2021. Um, we do have a little bit of a structure change going forward, though. Each month we're gonna have one educational event and one featured entrepreneur of the month. And today that's going to be Spencer Randall with Crypto EQ. And we also have Brian Alds from Privacy Pros joining us. But Spencer's going to lead us through, the really ever-present topic of cryptocurrencies and with a lot of emphasis on Bitcoin in his business, which helps develop insights and perspective around how to safely and efficiently trade and get involved in the crypto markets. So we're really looking forward to hearing from that. We'll pass it over to Al in just a minute to give a little bit deeper introduction. But right now, I'm just going to introduce Exit Advisors. For those of you who do not know us, we are a Houston-based M&A advisory firm, and we work with privately held companies like Spencer's to really help prepare them for an exit down the road, whether it's 12, 24, 36 months. We really like to get in front of these companies to help do cleanup work and create value for when it's time to take them to the market. We really pride ourselves on the education side of things, as well as you can tell with town halls like these. A lot of the content that we have in our resource library, you can check out on our website. But ultimately, our goal is to get your business prepared, add value, and really streamline the transaction side of things when it is time to go to market. Anyway, so I'm going to pass it over to Al. He's going to continue the introduction with Spencer and Crypto EQ, and we're really looking forward to hearing from you today.
Yeah, thanks, Andrew. I'm really excited. I'm honored to introduce Spencer, and he's someone that over the last couple of years is just truly, he's earned my respect, my trust, and my admiration in just so many ways. You're going to find out, just an incredible person. He's originally from Galveston, Texas, came off the island. Spencer is I'm gonna say he's wicked smart, just wicked smart. He has a mechanical engineering degree from Rice. He's incredibly giving. He's a great leader. He's been a mentor to so many of our students in the engineering department. He's been a facilitator for the Lilly Lab for Innovation and Entrepreneurship. He's been a business mentor to many of our MBA students. And most recently, I've worked with Spencer as he's become the director of the Rice Alumni Entrepreneurs and Innovators Roundtable. And he has single-handedly grown that from just a small volunteer organization with well under 50 members to over 200 and growing. Just been an incredible ride that Spencer's put us on. Spencer is an entrepreneur. He's a trusted advisor to many in the crypto space. He co-founded Crypto EQ, researches and consults in the crypto industry. Spencer has helped thousands of investors, traders, and enthusiasts demystify the complex world of cryptocurrency. One thing I know about Spencer is he's patient, and he helped me overcome all the challenges that I had with understanding the crypto market in a very patient, understanding 2-hour lunch with me. And if Spencer, if you can help me understand the crypto markets, I think you can help anybody understand the crypto markets. And not only help me understand it, but you've really kind of made me a believer, and I see the fundamental opportunity that there is and how it all works. And it's really just a pleasure to turn this over to you. And I look forward to hearing from you for the next hour or so. Thank you.
Thank you so much, Al. I think a great goal for today would be to recreate, the experience that you and I had for as many people as we can in the audience today. So I'd like to share a little bit about my story. So born and raised in Galveston, Texas, as Al said. I hold a Bachelor's of Science in Mechanical Engineering from Rice University. At some point, after working in industry for say 6 years or so, I completely fell down the Bitcoin rabbit hole, as they say, and the crypto rabbit hole, as they say. And at that point, I pursued the Y Combinator startup school, taking more of an entrepreneurship track. So I like to say I'm a professional engineer turned entrepreneur. At some point in industry, I completely embraced the crypto rabbit hole, as they say. And so now I've been trading and investing in crypto for 4 years. A few professional interests of mine. I am the principal and co-founder of CryptoEQ.io. Really head up our business development, fundraising, marketing efforts at CryptoEQ. And then I'm also the director of the Rice Alumni Entrepreneurs and Innovators Network. Al said I single-handedly grew the program. I do disagree. It really took a team to double the size of that program this past year. Al was a huge part of that. So Al and I have been working hand in hand to grow the RAEI network together. And so now, I'd like to walk y'all through kind of a crypto 101, as I'd like to say, and then tell you a little bit more about CryptoEQ and our team. And then towards the back end, we'd like to run through some industry-leading crypto tools that can help you get started on your crypto journey. And then we'll also hear from Brian Olds at Privacy Pros towards the back end of the call. And then we'll even get into Q&A on some popular crypto questions. So to frame the discussion today, I really invite everyone on the call to think about crypto as new financial infrastructure. There's a lot of different ways we could go with what the crypto industry is and can be. But I think for today, you'll see a lot of themes centered around new financial infrastructure. I'd like to paint a picture of kind of how the market looks today. Folks like Brian and myself have been in this industry for years and years. But let's just take a snapshot. What does it look like today? We're looking at about $1 trillion market. So we've seen tremendous growth in cryptocurrency markets. Today, a Bitcoin is about 60 to 70% of that market. Now there's some fluctuations in price and market cap, but Bitcoin is dominant in this market. It's 60 to 70% of the market. Then you have Ethereum, which is kind of the second by market cap to Bitcoin. And that's about 10 to 15% of the market. After that, you have what's called altcoins or alternative cryptocurrencies. And that represents about 15 to 20% of the market. And then lastly, we have what are called stable coins or coins that are pegged to the underlying value of another asset. And stable coins today represent less than 5% of the market. So Bitcoin was the first, so let's start there. It's the largest crypto by market cap. It sits at about 600 billion. And I like to frame Bitcoin, it's had a lot of narratives. I like to frame Bitcoin as the internet of money. So try to walk away with that perspective that we had the internet, and then now we have a new financial instrument in Bitcoin that really has become the internet of money. It's the world's first open source, decentralized blockchain. That means that there's no single central authority that controls Bitcoin. It's a fully distributed network. It's also the world's first unfalsifiable, digitally scarce asset. And what we mean by that is Bitcoin has a hard cap. There's only going to be 21 million Bitcoins in existence when all Bitcoin has been mined. So it's the first digitally scarce asset that the world's ever seen. It's pseudonymous, immutable, and censorship resistant. What we mean by that is, although your identity is not directly known when you use the blockchain, there are public addresses that are generated when you use something like Bitcoin. So Bitcoin can be tracked. So it's not completely anonymous, but it is pseudonymous. And it also enables global, permissionless, peer-to-peer financial settlement. So we think of Bitcoin as something that's leveraging the internet to allow a global economy where value can flow across borders, nations, continents with less friction than previously thought. Bitcoin has been a lot of things over its decade of existence. We've seen many narratives surface around what Bitcoin is, what it can be, and it's definitely evolved over the years. And so anyone that's confused by this space, joining us today. If you found it complex, it's because it is. And so I'd like to kind of simplify this chart and really focus on the beginning and then where we're at today. So, if you move left to right here, you'll see, 2009 to 2018 and beyond, over 10 years of existence. It started out in the blue in the early years as an eCash proof of concept. So this idea that you can send value over the internet very quickly, very fast. And then the market grew and grew and grew and grew. And with product market fit, sometimes you can have a product and the market will decide what it is for you. And so today, fast forward where we're at today, I think that Bitcoin's lane, if you will, is as an uncorrelated financial asset. And that's really what we'll spend more time talking about today. So how did we get there? How did Bitcoin become this uncorrelated financial asset? Let's talk a little bit about traits of money. So if you go line by line here and you look at the different characteristics of money, we could debate, each individual square for hours, but I think the trend holds true. And so if you look at crypto on the left as it compares to a fiat money like the US dollar in the middle, or gold on the left-hand side, you'll see that Bitcoin's performing and outperforming other forms of money in several categories. And so for this reason, people in the crypto space and Bitcoiners specifically view Bitcoin as the hardest, soundest money ever invented. And so when we continue to pursue other crypto assets, please come back to this idea that Bitcoin was the first, it is the most secure, and then many people in the space see it as a digital gold. When we look at 2020, the pandemic specifically, a lot of people in our industry view the pandemic as, quote unquote, the great accelerator. And what I mean by that is there were a lot of trends in place as the world was shifting more virtual, and the pandemic helped accelerate and further those trends. So if we look at M1 money supply in the US specifically, the trend that we were seeing was more and more money printing. And if you look at the very last year and in response to the pandemic, we've gone fully vertical and fully parabolic in the M1 money supply in the US. And so for this reason, we saw a new persona adopt Bitcoin and adopt Bitcoin as a digital gold, as a reserve asset for things like treasuries and new funds coming online, pension funds, endowments, for the first time really starting to open their eyes to Bitcoin. The question we get a lot is, there's a lot of talk about Bitcoin, but how do you fundamentally value something that's entirely digital? And so this is one of my favorite models for wrapping your head around Bitcoin's current valuation and then comparing that to Bitcoin's current price. This is called the Bitcoin stock to flow model. And if you zoom in and you kind of drill down on this chart, you'll see you've got an exponential price on the vertical axis. And then on the horizontal axis, you've got time in years. And then you've got a multicolored kind of zigzag cycle that's moving up. And then you've got a thinner line there in red. That thin line represents Bitcoin's stock to flow. And that is Bitcoin's issuance by the network, so the newly minted Bitcoins, against the available supply. So if you think about think of it as how easy is it to access new Bitcoin as someone coming online today that would like to participate in the market. And so you'll see that there's these cycles called the halving, where the rate of issuance of Bitcoin gets cut in half every 4 years. And this furthers that narrative that we talked about in the beginning about Bitcoin being this digitally scarce asset. And so these roughly 4-year cycles of halving events make Bitcoin more and more scarce the further the network grows. And you can see that around these halving events, these fundamental movements in Bitcoin, there's exuberance in price. We had one in 13 and 14. We had another one in 17 and early 18. And we're experiencing more exuberance now as new participants are coming into the market and people are coming back to the market. So when people ask me to kind of put a price target on Bitcoin or, think about where Bitcoin can go, I always come back to this model, the stock to flow model. It's the same model that's used to value things like gold and platinum and silver and other commodities. And it really does lend itself well to Bitcoin. The second largest crypto by market cap is Ethereum. So let's talk a little bit about something other than Bitcoin, right? This is a 10 to 15% of the space. It's about 150 billion in market cap today. It really is considered a second mover. If Bitcoin is a first generation blockchain, then Ethereum is a second generation blockchain. Ethereum was founded to improve upon Bitcoin's functionality. And we framed Bitcoin as the internet of money. Let's frame Ethereum as the evolution of the internet. So as the internet continues to evolve, it's quite possible that we could see a decentralized marketplace where apps and economies are built atop a base layer like Ethereum that doesn't have a central authority of control. Ethereum is the world's largest open source general purpose smart contracts platform. It currently does serve as the base layer for dApps or decentralized applications. And it is also the leading base layer of what we'll call DeFi or the decentralized finance economy. When we talk about things like dApps, what we mean by that is applications that you use every day, right? So for example, your Zoom application that you're on right now, having that be hosted and used in a decentralized manner and built atop a decentralized base layer, as opposed to having to access Zoom through a centrally controlled app store. And when we talk about decentralized finance and DeFi, what we mean by that is really the beginning of a permissionless economy. This idea that you can be your own bank and that you can transact with whomever or whoever you would like to and send value to and from people all over the world without a trusted third party needing to sign off on those transactions. So when you talk about decentralization, what you're really talking about is removing this layer of trust in the ask of a third entity. Instead, the folks are validating and trusting in the network itself. Similar to Bitcoin, Ethereum has been a lot of things over the years. And if you feel like the narrative around Ethereum is confusing as well, it's because it is complex. And similar to Bitcoin, I like to talk about how it started and then focus on where it is now. So Ethereum really started out on the left-hand side is Bitcoin 2.0. And then a lot happened over the years. We could do a whole separate presentation on Ethereum. But where we are today is more of a DeFi economy, an open economy, a permissionless system for financial services. I'd also like to highlight Ethereum's use case for dApps and its vision to be a world computer, and it's a place where you can build decentralized applications. I'd like to drill down here on DeFi and highlight the DeFi economy. So today, on the Ethereum network, there's about 25 billion locked up in DeFi. And to put things in perspective, earlier we talked about stable coins and the fact that stable coins are about 2.5% or so of the total market cap of crypto. So DeFi and stable coins roughly have similar market caps and similar size. So DeFi has been growing exponentially. And just to drive the point home, DeFi is this decentralized financial economy where you can have permissionless banking and send value globally without a trusted third party needing to intermediate. We get tons and tons of questions on things outside of Bitcoin and Ethereum. There's literally thousands of other cryptocurrencies that that people can participate in these markets. But I'd like to take a step back from those thousands and just drill down and talk about a couple, really a handful of select altcoins or alternative cryptocurrencies. Um, that the rating system that we devised at Crypto AQ really helps identify the quality assets in the crypto industry. So we'll highlight our highest rated assets using our core rating framework. Outside of Bitcoin and Ethereum, we'd like to note Chainlink, Polkadot, Cardano, Tezos, Monero, and Litecoin. Now, each of these projects has a different story. Litecoin, for example, is really touted as the silver to Bitcoin's gold. So if you're a fan of bullion or you like precious metals markets, you could think of Litecoin as the silver that trades against Bitcoin's gold. Of course, there's other projects like Monero. Monero is kind of the driving narrative for Monero is a privacy-centric cryptocurrency. So, I mentioned that Bitcoin can be tracked on the blockchain and the transactions can be tracked. Monero specializes in keeping all of those transactions private and obscuring what actually happens on the blockchain so that your identity and anonymity is protected. Tezos, Cardano, Polkadot, and Chainlink are founded and built more geared towards the smart contracts, general purpose smart contracts platforms. Tezos and Cardano I think of as direct competitors to Ethereum, and they already have captured some of Ethereum's market, and that trend could continue. The leading general purpose smart contracts platform certainly is Ethereum, but a lot can happen over the next few years. Polkadot I think of more as interoperability between blockchains, and then Chainlink I think of as more geared towards oracles and specializing in helping all of these blockchains source data and pull in data so that they can perform autonomous functions and have a central data source to call on for things like price, right? So for example, if any of these smart contracts platforms need to call in price, Chainlink can serve as that link to put price information on each of these smart contracts platforms. Another category, right? So we've gone through three categories. We've got your Bitcoin, Ethereum, your altcoins. Now let's talk about stable coins. This is an entirely separate type of crypto. Stable coins are typically pegged to one of three things: a crypto, fiat money, or an exchange traded commodity. Stablecoins are very interesting because they allow for the instant processing and security that you get with crypto, but that's combined with a more limited volatility because it's pegged to something that's traditional. So it's kind of some people describe it as being married and really the best of both worlds of crypto and traditional instruments. Some tangible examples of what you can do with stablecoins. We've got USDC or USD coin, which is pegged to the US dollar. We have wrapped Bitcoin or WBTC, which is pegged to Bitcoin. WBTC exists on the Ethereum network. So that's an example of a digital asset that is set up to be pegged to Bitcoin that exists on a different blockchain, which is very interesting. And then lastly, PAX G or PAX Gold, which is a digital asset that is pegged to the spot price of gold. So the spot price of physical gold. Today, Tether, USD Coin, and DAI are the largest stablecoins by market cap, and really make up a significant part of that 5% or so market cap that we mentioned of all of crypto. I'd like to shift gears here and talk a little bit about Crypto EQ. So our roots at Crypto EQ, we really came together at community events. So in early 2017, I started exploring crypto and really dove down the rabbit hole. And very quickly, I was like, I've got to get outside of this kind of silo that I'm in. You know, how many smart people in this world are researching crypto just like I am? And so I started to go to like meetups and conferences and different community events. And after talking to a lot of smart people, I decided to found my own community. And it wasn't called Crypto EQ at the time, but it was a Houston-based cryptocurrency community, and that's where the co-founders of Crypto EQ came together. And so, you know, conversations like the one pictured here, just a group of folks interested in the space coming together, you know, talking about the evolution that we were seeing in this new financial infrastructure. One of the common problems that we found at these meetups was a division in thought leadership around cryptos, around Bitcoin, around Ethereum, and kind of my one-liner for that would be, what is complex and disruptive is often controversial and misunderstood. And so we had thought leaders like Warren Buffett calling Bitcoin rat poison. We had people like Ray Dalio, who I have an immense amount of respect for, dismissing Bitcoin as simply a bubble. And then on the flip side of the coin, you had people like Peter Thiel and Jack Dorsey, who are tech entrepreneurs and founders of their own respective tech companies, touting Bitcoin as something that was the future. And so at these meetups and at these community events, we would work through different topics to, you know, help each other navigate this industry. So fast forward several years, you know, after we founded the company Crypto EQ, which is really born out of this community, these community events that we had, we built a web app. We built cryptoeq.io. And so the idea here is we wanted to scale up the conversations that we were having locally in the Houston area to help the entire world. And so that's what we think that we've built at cryptoeq.io, and that's what we're delivering to the audience today. Some of the benefits of using cryptoeq.io is it really helps separate signal over noise, right? So I mentioned there's thousands of cryptocurrencies. We help you drill down and focus on the ones that matter. We also give you direction on top of data. So there's a lot of tools in the crypto industry that give you tons and tons of information, but we're focused on helping you leverage that information to take action. And then, you know, quality over quantity, right? So it's noisy out there. You could really pull your hair out looking at a new project every single day. So we drill down and focus on 35 crypto assets today, going on 40 crypto assets. So we really help you filter through all that noise and focus on quality crypto assets. And then lastly, we leverage first principles thinking to make this app as usable as possible. So we try to boil everything down and distill it down, both in our research and our signals, to make this thing as easy to use as possible. It's a mobile first progressive web app. We like to keep it simple. You can also access streaming market data, real-time trading signals, and an entire suite of objective, independent research on cryptos. A little bit about the founding team. So Brooks, Mike, and myself came together at those community events I mentioned in 2017 and founded Crypto EQ. Together, we've got over 20 plus years of experience in the digital asset industry. And we work together each and every single day to lead users, customers, and clients to the right opportunities at the right time. As far as, you know, where we invest our time each and every day to help grow this organization, I invest a lot of my time with our business development teams and our marketing teams. And I also head up and took the reins on fundraising for Crypto EQ. Brooks focuses more on our product, and he helps lead our teams of our devs and developers, as well as our experience design team and any UI UX design and implementation. And then Michael heads up our core research team and helps lead our team of digital asset analysts. And Mike's really the brains behind all of the research that you see on the site and helps lead that team, whereas Brooks is more the brains behind the product and the look and feel of the website. our team has grown a lot with this industry, and it's really a lesson and a testament to going further together. You know, we could not have done what we've done without an incredible team. And so I'd like to highlight some of the different folks and roles that we've brought on board to serve, this increased global interest in crypto research and information. We brought on 3 investors and partners. We've got 2 folks heading up our business development team, and then a team of 3 folks leading our marketing efforts. We've also brought on several new developers, both software engineers and full stack developers, as well as dedicated roles for research and product design. We've talked a lot about the team. We've talked a little bit about the why, but let's get into performance. So when you look at CryptoEQ's core rating framework and the research that we've done, tens of thousands of hours of research that we've done, how has it performed? So our core rating framework, left to right, you can see we've got everything from a deficient asset, which would be a lower quality crypto asset, to neutral, bronze, silver, and then gold being the highest core rating that we offer. So if you average performance, what we would call a lower quality asset against a higher quality asset, you're gonna have 175% greater ROI on your investment. So we're really proud of our core rating framework and the way it helped us and many of our users navigate 2020. I'd also like to highlight our trading performance. So there's 2 products that we're thinking about here, the trading system and the investing system. So the core rating framework is more for our investors, whereas the trading algorithms are really geared towards our traders, our users that are traders. The trading algorithm itself boasts up to an 85% win rate and consistently outperforms a buy and hold strategy. So in this graphic, you can see the red would mark, a flag for a pullback and potentially a profit-taking scenario, whereas the green is where we encourage you to add to your position. And you can see how, as we've tracked this run up, and we've really mapped out profit-taking as well as entry points. So we're proud of both our core rating framework and the trading systems that we've developed to help our users and customers. Now I'd like to run through a few different options you have for tools to help you get started in crypto. So CryptoEQ is industry-leading research and market insights. Our ratings and signals really do help accelerate your investing success. We are Rice alumni owned and operated, and we invite everyone on the call to start their CryptoEQ.io journey today and take $10 off with the exit promo code at checkout. Another company I'd like to highlight is 7 Investing. They produce industry-leading equities research, and we recently partnered with them to produce exclusive content on the intersection of equities and cryptos. So when you think about things like MicroStrategy and then their decision to allocate treasury capital and part of their balance sheet to Bitcoin, you can really see that there's this overlap in equities and cryptos. And so we've entered a partnership with them to explore that and produce specialized content on the intersection of equities and cryptos. 7 Investing is also Rice alumni owned and operated. And we invite you to start your 7investing.com journey today and take $10 off with CryptoEQ at checkout. A few other tools I'd like to highlight. Coinbase, which is, again, Rice alumni owned and operated. They recently filed for their IPO. This is a good product for your first crypto app. Right? If you're looking to buy and sell things like Bitcoin and Ethereum, it's an industry-leading marketplace. It's one of the largest crypto exchanges in the United States. Another product that our team recommends, it's one of our top picks for the crypto industry, is BlockFi. BlockFi, I like to kind of frame it as a crypto bank. It's a place where you could store your crypto assets long-term if you wanted to store them online. And one of the advantages of using something like BlockFi is it's crypto interest earning account or interest bearing account. So this is a place where you can earn 8.6% yield on your stablecoin balance. So like a quick tangible example for the audience, if you wanted to take some of your dollars that are in traditional banking system and convert them to a stable coin, you could lock them up at a place like BlockFi, and instead of earning a fraction of a percent in interest, you could earn 8.6% in interest. You can also store crypto assets like Bitcoin and Ethereum on BlockFi's exchange, 6% APY on your Bitcoin and 5.25% APY on your Ethereum balance. Anyone on the call that would like to take the conversation further, after our Q&A today, we encourage you to reach out on your favorite social media app at CryptoEQ on all social media apps. You can also reach us at team@cryptoeq.io or use the web app at cryptoeq.io. Thank you all for having me on. I really enjoyed sharing some of what I know about the space, and I hope that helped you take a new step forward as we retool our financial infrastructure and charge ahead into 2021. At this point, I'd like to hand it over to Brian. Brian is another Rice alum who owns and operates a business in the crypto industry. Brian, please take it from here.
Hey, thanks, Spencer, and a great talk, kind of giving the big overview. Yeah, my name is Brian Alds. I'm currently an MBA, student at the Jones School, but I graduated from the Naval Academy, the BS in Naval Arc, and I run a company called privacypros.io. Basically, if Spencer helps you figure out what crypto to buy, I help you figure out how to store it. And one of the cool things about cryptocurrency is you can self-custody it. So you can figure out how to keep that and keep it safe yourself, because one of the things that people have learned the hard way over the course of crypto is these exchanges, although they're getting better and better, have run into issues with security. And if they get hacked, then you can lose all of your funds there. So if you can custody that yourself, then that's a good thing. And so we sell the hardware as well as provide the knowledge online of how to do that. Can you go to the next slide, Spence? Yeah, so at Privacy Pros, we sell, like I said, we sell hardware wallets, which basically is like your wallet for managing your cryptocurrency. And then we also sell a product called the Bill Funnel, which is a fireproof and waterproof backup. And we're offering 10% off of any purchase for the people on the call with the same promo code that Spencer gave, and that's EXIT. So, and we are also available to answer any questions about, hey, I bought Bitcoin a while ago, I'd like to get it off the exchange. What do you recommend? What's the setup and that kind of thing? So if there are any questions, I'd love to take them.
Guys, I have a question just to kind of kick things off while maybe some additional questions come in. It's around regulation of Bitcoin. There's been some talk of that in the news. You'll see it on CNBC. I guess this is kind of a loaded question, but how would some additional oversight impact Bitcoin for the better or for the worse? And like, what are your perceptions of that? Where do you see this going?
I can kick that off. Andrew, as far as regulatory concerns, I think probably one of the biggest hurdles that you'd like to see, someone inside the industry that you'd like to see, is that Bitcoin and Ethereum are not a security. And so Bitcoin and Ethereum are not a security. We have clear guidance from our regulatory bodies on that. So as we see additional clarity, I'm excited because the more clarity we have, the larger this asset grows. And at $1 trillion market cap, I think that we're just getting started. So I crave that clarity. I think that you'll see more and more institutional adoption as we get more clarity. So I look forward to having some of this gray, more black and white. Brian, what's your take?
Yeah, so I guess, believe it or not, I have a little bit of I wouldn't say a different opinion, but I think like in the short term, I think regulations could do some positive or some good, or if they're anti-Bitcoin, like what the old Treasury Secretary was initially proposing. You could see some short-term negative effects, but the great thing about Bitcoin is it's just going to keep on running, and there's really not a lot that they could slow it down, but there's not a lot they could do to stop it, and because it's running decentralized, so you can't go shut down the Bitcoin company. And I think that as some countries try to do stuff to slow it down or stop it, and then they're shown that that doesn't work, that's just going to prove more and more this narrative of, hey, if you are living in an authoritarian government or a place where the printing press is running nonstop, and you want to be able to get savings in something outside of that financial system, then Bitcoin is for you. Oh, and maybe your government's trying to censor transactions. Well, then Bitcoin is for you. So as that narrative grows, Bitcoin is just going to get stronger and stronger, and maybe not be there yet, but eventually it's going to get to where a government, any one government, or even governments acting in concert won't be able to do anything about it.
Yeah, a nice tangible example to build on what Brian shared. Countries like China have banned Bitcoin, I think almost like 10 times, right? So like, you'll see a country like China ban Bitcoin. We might see some short term volatility around that news, but we always bounce back and keep growing. So, I mean, if large nations like China can ban Bitcoin and Bitcoin perseveres, I'm confident, like Brian is, that this network and space will continue to grow.
Some other questions. I'm going to kind of hop around, not necessarily in order, but more on relevance to what we've been talking about. Mark Hammer was asking about the current administration and its, whether it's going to be fueling or stifling crypto. It's kind of snowballing off of what we just talked about. More specific to maybe the government, though, versus the SEC or any other type of regulatory exchange.
Yeah, it appears like the Biden administration, at least just judging from the background of the people that he is appointing, will be more friendly than the previous administration. The Treasury Secretary, I always mispronounce the name, but Mnuchin was not crypto friendly at all, and had some proposed regulations that would have, I think, really hampered the growth over the very short term. But now that that's not the case anymore, or even it's a new sheriff is in town, I think the short term prospects seem a little brighter from that regard. But what do you think, Spencer?
The pattern I see is, you've got you'll have a headline come out that may have been based in maybe someone's opinion that hasn't spent as much time thinking about the space. And then I'm using Yellen as an example. And then she comes back out and clarifies, kind of walks back some of what she said. So Yellen's initial statement from a couple of weeks ago was harsh. Then she walked it back. And so I think that if you use Yellen as an example, I think she's on her own crypto journey. And I think that she is learning more and more about the space. And I think that seeing her walk back some of the things that she said is very encouraging. And so I think that everyone is learning about the space with us. And the pattern that I'm seeing hold true is you might see something harsh in a spin in a headline, and then you might see something that walks it back a few weeks later. I also agree with Brian in the sense that the Biden administration seems to be more open to a crypto economy than previous administration. So I do think that that's very interesting for our industry. I would also say that I don't think the money printing is going to slow down at all. which I don't want to frame it this way, but I do think that's favorable for our industry, as you see more people look for places that are a safe store value and sound money.
And peel it back one more layer, but with the adoption of larger institutions, this was also submitted, and how that would affect the crypto market. We've definitely already seen that to a degree, but I guess maybe I can steer this in more of a direct way. What types of businesses or larger institutions, not just from a trading perspective, but will start accepting Bitcoin, and some are already doing that, but who do you see the biggest players, and which industries will start really using that as like a form of payment more so than the dollar?
Andrew, are you more interested in like B2B transactions or like funds?
Anything from B2B to
Yeah.
just retail. I
Yeah.
back
Okay.
when Bitcoin was starting, people were accepting, some Starbucks locations were accepting Bitcoin for
Yeah.
coffee.
Yeah. Yeah.
How do you see maybe rolling that out on a much larger scale where this is going to become, do you want to pay in dollars or Bitcoin?
Yeah. It's a good point. A product I use every day is a crypto card. So I actually can spend my crypto every day if I want to. And the technology that makes that possible is it's a Visa card. So it's a cash settled Visa card where you can top it up and preload it with whatever crypto you want, as long as it's supported by the ecosystem. So I guess with things like Visa partnering with a significant number of crypto companies to deliver something traditional to your hands that you can swipe, that allows you to spend your crypto, is already here. The key part, I think, and I think what your question is getting at, is it's not settled in crypto instantaneously. It's settled in crypto on the back end. And so, like, this would be a good point to bring up the PayPal news. So PayPal will let you paper trade, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, but it's not actually settled in crypto. You can actually withdraw your crypto. But with things like Visa and PayPal, these fintech giants, partnering with a significant number of crypto companies, I think the days of cash settled crypto services are here. It's a question of adoption now. So I mean, anyone on this call could start transacting in cash settled crypto for their business or for themselves today. Yeah.
So Raven made a comment that I guess seems to fall in line with this about earning interest on it or using it as collateral to borrow rather than having to sell. And it doesn't seem like we're there yet based on what you guys are saying. While it's really maybe rapid settlement, from converting to cash and then using the cash. I guess the question is, do you see Bitcoin being used as collateral in the future?
I think you can do that now. Now it's from a limited number of companies, but you can take a loan out against your crypto using BlockFi, which Spencer referenced. And then there's a couple of other companies they're doing too. One, Unchained Capital, is out of Austin. So it's definitely a doable thing. The interest rates are a little high on it, like higher than I would like, but especially for a collateralized loan. But it's definitely doable. And again, with BlockFi, you can put your Bitcoin into your BlockFi account and earn interest on it. So
Yeah. I would say in the crypto industry, we're spoiled with how good interest rates we can get, because you cut out a lot of the intermediaries, middlemen, and third parties. Brian said that BlockFi or Unchained, their interest rates a little high to borrow, but it still undercuts, your traditional bank by over 100%. So, roughly you're looking at about 5% interest rate on your money if you would like to borrow using crypto as collateral at either one of these entities. Again, that's BlockFi and Unchained Capital. But you can very much put your digital assets up as collateral and have a loan same day if you desired.
Okay, a few more here, and I'm going to try to tie some of these together from Mark and Raul. Raul's kind of talking about, using Coinbase, which requires a fee, versus Robinhood, which is free. Mark is trying to tie into, which brokerage players are going to start heading in this direction, and actually housing Bitcoin and not maybe Bitcoin ETFs. So could you talk about, your favorite platforms, I guess, and maybe some of the benefits to certain ones?
Yeah, I'd like to talk about Robinhood versus something like Coinbase and Gemini. Um, I'll put PayPal in there too. So Robinhood and PayPal, I want to emphasize your paper trading. So you're taking some fiat and you're buying something that's pegged to a Bitcoin, but you're not going to be able to withdraw those assets and self custody it, right? Like when you think about Brian's mission and what he's doing at Billfodl, you want to be able to self custody some of your crypto. So if you've used PayPal or Robinhood, just know that the self custody is not really an option today. That's why the Crypto EQ team and Brian and I would encourage you to use something like Gemini or Coinbase. So Gemini.com, Coinbase.com, they're more robust crypto marketplaces and exchanges that will allow you to withdraw and custody the crypto assets that you're buying and owning. So those would be kind of my top two for U.S. customers would be Gemini and Coinbase for crypto.
Good to know. Well, I think we've got one more, and then we can wrap it up because we're approaching the hour. And I think I already know the answer to this because you guys are pretty bullish. But Jeff is, wondering if it's had such a spike. He's done well in Bitcoin. What type of pullback do you see on the horizon? And maybe I can get a little more specific there and say, let's say you're long-term bullish, very bullish, but maybe there's something, in the intermittent period, midterm period that could kind of poses some headwinds. What do you think the drivers are for a pullback right now? Maybe regulatory, acceptance of brokerage groups, that kind of thing.
Brian, you got anything that?
Yeah, I mean, I guess if the Fed were to come out with a more hawkish stance, then, or even like messaging, then that would be bearish for sure. Or one of the other big central banks. But my thesis has always been the money printer is going to keep going, and that was kind of why I got into Bitcoin, what attracted me to it, and that thesis has not changed since the day I first bought my Bitcoin. It's just the printers are going to keep printing, and Bitcoin protects you from that. And I think we've just seen an acceleration of that all around the world, kind of on the one chart that Spencer showed. So that's.
Andrew, if I can add a little bit more.
Yeah.
I think that fundamental news and headlines and things that drive this just kind of short-term price action, I would call it a pullback. Fundamental news has been a part of the space for a decade. And so when we look at the fundamental models, news was always a part of the story. Headlines were always a part of the story. Regulation was always a part of the story. So we have pullbacks on this growth cycle and growth curve that we're on. But when I think about where the price is headed, I root myself in that stock to flow model. And I think about the fundamental supply and the rate of issuance and scarcity of Bitcoin. And that hard money narrative seems to be really taken off with all of the money printing that's going on globally. So I think what people aren't talking about is the amount of capital that's on the sidelines that's waiting for this asset to grow up just a little bit more. We're talking about some of the largest funds in the world that are researching and just waiting on something like a Bitcoin ETF to deploy. They're ready to deploy more capital than we've ever seen before. And they're waiting for the right signals and the right products and the right regulatory clarity. So that's what I think is really exciting about 2021.
Hey, Spencer, Brian, I've got a follow-up question to that. So I think the appeal to me for Bitcoin has been this whole scarcity issue, right? Is gets more popular, the demand goes up, the supply goes down as people hoard it. But is there a risk that these alternative cryptocurrencies are going to dilute that potential value? And you know, I kind of compare it to like the Facebook, the Twitter, you know, Teslas that have just run away as just complete leaders, right? Even though there's others out there, and then once you kind of get that, you've got that whole supply and demand factor kicking in. So do you see these alternatives to Bitcoin, you know, popping up and diluting that scarcity value?
That's a great question, Al. I think on the lines of like sound money, hard money, and that narrative, I think Bitcoin's really closed the door on, you know, quote unquote Bitcoin counterparts or knockoffs. I mean, Bitcoin code's been forked so many times. So many new Bitcoins have tried to replicate what Bitcoin is. But it's the Bitcoin network that's really the intrinsic value that allows Bitcoin to keep charging ahead as it has. In terms of diluting Bitcoin's market, I don't see that narrative playing out. I'm confident that Bitcoin will continue to be, you know, that hard money, sound money, and be attractive as an uncorrelated financial asset. But when we get into other assets and digital assets, and we talk about use case, right? I mean, Ethereum's mission is different than Bitcoin's, and the market's deciding as much. So when you look at Ethereum and Ethereum's competitors, and then other use cases that haven't really come to fruition yet as this whole industry evolves and grows, I do think there can be a lot of froth and back and forth and market share competition. And that's kind of the way I see it. I kind of look at it as Bitcoin, Ethereum, and then this entire basket of altcoins there. You could have a lot of froth. Brian, what's your take?
I don't have a ton to add. I would say the quality of the Bitcoin developers. I mean, we're talking about like genius level, and that's why the Bitcoin code is the one that gets forked and tried to create these alternatives where and the geniuses in the room are just going to keep working on Bitcoin. And then also you have the mining, which is basically the security of the network, and there's not another really competitor to that. So if you do try to make like a knockoff version of say you try to make a knockoff Coke, well, you're not going to have the advertising money. You're not going to have, oh, it's the same thing with Bitcoin. There's just so many miners, and all the geniuses in the room are working on Bitcoin, and it's code. So if there, you know, is some great use case of some other coin that gets developed, well, we could add that to Bitcoin if we had the consensus to do that. So that's kind of my answer.
Yeah. If you're looking at like your own investment portfolio as an individual, and you want to add something that's hard money, that's uncorrelated to anything else, or like low correlation to anything else, you could stop at Bitcoin and add a position in Bitcoin. And if, again, this is not personal financial advice, this is just my take and opinion. If you're looking at broader theses in crypto and you're interested in other use cases, that's when I'd really open your eyes to the whole industry. And that's where you can kind of find things like a Facebook, a Microsoft, a Tesla early. You know, to Al's point, right? There's so many use cases we can explore in this industry beyond the hard money use case.
Awesome. Well, guys, thank you for all of your time and your insights. This has been great, really educational. I guess to wrap it up, you know, if you have any closing remarks, I'd love to hear them. Otherwise, you know, to everyone who joined us, thank you. And like I said, you know, we're going to be doing this each month. It's no longer weekly, but you know, every other week we'll have the featured entrepreneur similar today, and then we'll have like an educational event. And I believe Gary Cooper's up on deck for the next presentation in February. So, but Spencer, Brian, thank you for joining us. Any final thoughts?
I'd just like to say thank you for letting us come on here and share a little bit about what we do, our industry. And I encourage everyone to think about new financial infrastructure that's possible with things like cryptocurrency, digital assets. And I hope that you'll have a great 2021. Thank you for having us.
Yeah, thank y'all so much for hosting this. It's really cool, and I appreciate the invite.
Yeah, anytime. We'll be in touch. Oh, and to everybody else, I've seen a lot of questions. We will be distributing the recording and the presentation. You should get an email with it, and you'll also be able to grab it off of our website. But until next time, thank you for joining us.
Thank you.